Thank you very much indeed, Peter. Welcome, Shivani. As we say, hype or hope, tech companies, fintech companies. You have almost 2.5 million customers from Mexico to the Philippines, Tanzania, India. How many of those people would you say would not be able to borrow if it wasn't for companies such as yourselves?
Yeah, I mean, I think it's a good question because about 3 billion people around the world are currently underserved by traditional financial institutions. And so the exact point of how many people wouldn't be able to borrow, I would say about 85% of those individuals, because these are customers that have no national ID many times. There's no credit bureau in these markets. And then in addition to that, they have no credit history to prove their actual credit worthiness. But when we say underserved, it's actually also, we have to remember that there are plenty of people that are borrowing from loan sharks, from even traditional institutions or microfinance institutions, but they're actually being charged really exorbitant rates. And so I think that's also the thing to think about is it's like, yes, there is the underbanked and the people that we are serving that never had access to credit in a formal way. But in addition to that, there's billions of people that are not getting the products that they really deserve.
And how do you stand out from the loan sharks and everyone else that's out there? I mean, why should I come to you rather than someone else who's at the end of my road?
Well, I think the first piece is just out of true convenience. I mean, our product provides credit in under 2 minutes. And so just like any other consumer app in the market, you can go to the Google Play Store, you can download our application, and within seconds, you're approved, and then within under 2 minutes, you actually have money in the account of your choosing. So you can get that cash at a retail location, you can go to a bank account, a mobile money agent if that exists in your market, or you can go to a bill payment center. And so we really kind of focus on this idea that just because you are underserved doesn't mean that we shouldn't provide you with the best value that technology can actually give us. And then I would say, obviously, there's the aspect of access, which is really about the fact that we are opening up this marketplace and bringing in, hundreds of millions of new customers into that marketplace.
But Talas been around for about 4 years now, and banks are starting to pay attention to the likes of disruptors, people who are doing things differently. How do you still stay relevant and ahead of the game when obviously your pockets are not as deep as the big banks in emerging markets? So, what's your USP?
I think it's our relationship with our customers, and it's the trust that we create with them. So we have a 95% retention rate, where customers that come in with us actually stay with us. And it's about showing them over time that the product continues to get better and better. We recently started doing risk-based pricing, where initially when we came into the market and had, let's say, early algorithms, we weren't necessarily able to get to this place. But now, starting at your very first loan with us, you actually get a completely differentiated experience. And so I think it's showing customers that we are actually holistically trying to understand them and actually building something that is really customized for their financial life.
And do you want to stay completely separate from the big banks, from the traditional, whether it's bricks and mortar or other financial institutions, or can there be some sort of marriage between the fintechs, lending, and the bigger boys and girls?
I think so. I mean, I was reading something the other day that actually said that if we look at how much traditional banks are actually investing in technology, it's actually bigger budgets than any fintech has ever raised. And so in some ways, I think there is this kind of force of banks starting to innovate and starting to kind of move towards where the fintechs are. And so I think it's kind of thinking about what is the value I would say the disruption that we are all trying to create. Is it in a particular vertical? Is it the relationship? Is it the UX? What are we actually doing that we think we are uniquely good at? And then otherwise, the things that you may not want to do, you should partner. And I think that in some ways, when we think about kind of the other financial products in someone's life, around savings, around insurance, these other things, they require a lot of infrastructure. And they actually require a lot of feet on the street in some ways. And so how can we leverage some of those things and then kind of add to it?
What are the answers to those questions? You just asked yourself an awful lot of questions. What are your answers?
No, I think that that is why I'm saying that, we are obviously looking at other products outside of credit. We've started to already start to think about how do we further that relationship. And so for us, we may not want to actually go ahead and become a bank that is regulated. And so what does it look like by working with one of those institutions, maybe on the back end? It's a win-win where we can actually take our deposits and give it to them. But then it also helps us better understand our customers and actually help them with resilience, with shocks, which is, again, something that we think a lot about because our customers have very volatile lives.
You mentioned the regulation word, and the markets that you're in have very differing degrees of regulation, from almost non-existent to quite tightly regulated. How do you span that sort of arc of regulation?
Yeah, you just came from Kenya as well, so you know this well. But, I think especially where we're looking at markets that there is no, traditional credit bureau existing. In places like, let's say in the Philippines, there are 17 different forms of national ID that are accepted. And so in that sense, when we think about KYC, compliance, all of these things, it's pretty difficult. And you're kind of operating in a wild, wild west environment. And so what we've done is actually said in markets where there is nascent regulation, let's actually look to markets like the UK, let's look to markets like the US, and places where regulation has existed in financial services. And actually take a page from their book and actually apply that across our markets. So we currently work across 5 different countries and we're on 3 different continents. And instead of actually just focusing on what exists in one country, we said, actually something easier for us to do is just apply it globally. And so even if it's not required, we are doing digital KYC. We are working with governments to then actually talk to them about it, about basically how we do KYC. How do we actually show receipt data? Actually making sure that from a data privacy perspective and consumer protection perspective, we're at the highest levels of compliance. And so
does that cost you in some markets?
As in, does it cost us more to do it this way?
And customers, does it cost you customers because, they go elsewhere where, people don't care so much?
It does, but at the same time, I think eventually what happens is that you actually limit fraud, right? And so in some ways, I actually think these things are actually in service of the customer and in service of actually building, a sustainable business. And so over time, those regulations will come in. And so instead of kind of reacting to it, in some ways, we're actually going ahead and actually proactively putting those things in. And then you can actually have a seat at the table because at least, you're doing it in service of the customer. Your
challenges are not just regulation and sort of traditional banks and financial service companies, but also super apps and big, whether it's WeChat maybe in Chinese point of view, all things, Gojek, you name it. Do they keep you awake at night?
A little. It's been interesting for us to kind of realize, where I think our brand is going in these markets. In markets like East Africa, we're currently one of the top 5 apps in the entire country. So not just in financial services. And so what you start to realize is you are competing for mind share. You are competing to be that partner with the customer. And so when we look at Gojek or Tokopedia and those, that's what they have. And now they're starting to think about financial services within those applications as well. I think we think of it as, the difference is outside of a transportation app. I would say financial services, in some ways, you can't just, you really have to inherently understand what it is that you are trying to help the customer with. And in a sense, credit is not one of those things where, just high growth is going to win, because you really need to make sure you have a quality portfolio and that you're actually getting that, back. And so, yes, over time, we will think about kind of maybe a super app of financial services, but probably never going into, transportation, education, things like that. I'll never say never, but at the same time, I think it's not exactly the same. I do think what they're doing is actually just continuing to really, I think, understand their customers and realize that if they have that trust with them, then maybe they are the best conduit to actually bringing those services to market.
So the implication of what you're saying then is it's all about building trust with customers, and that's the long-term ultimate. And what do customers tell you? What do they really want? What are the really important things? Is it as cheap as possible loans? Is it ready access? So in this whole thing, how can you stay ahead by really appealing to what the customers want?
So we think about it in, I would say, 3 ways. We think about it as how can we help our customers with what they want to do with money, what they need to do, and what they should do. And so that really encompasses someone's entire financial life. And so that's what we're always when we look at our data, we're trying to understand the stories behind that information and to really understand, okay, so we are providing credit to you, but do we notice that you potentially had a life change event? Right? In that sense, we're going to start to realize that maybe you need to be, getting health insurance. Maybe you need life insurance. There are these other products that are going to happen.
But you don't offer those yet.
We do not offer them yet, but I think that, it's remembering that we don't have to only be the ones to create them. And so if we understand the customer, can we even direct them to another platform? And I think that's the thing, is starting to realize that we don't always have to see ourselves as competitors in this market. In some ways, I think there is, a large enough market for everyone to exist. But the other piece is that if you focus on the business model of trust, then I think in some ways you can actually see your product in other people's ecosystem as well.
There are still, you began by mentioning the 3 billion number of people who are underserved, and there are still, even say half that number might have no access. How are the tech companies or others going to reach, the real bottom of the pyramid, or is there always going to be people who are unreachable?
No, I'm very bullish on this in the sense that, yes, I think that there is something around community approaches and a place for the fact that even technology may not go all the way down, but at the same time, I think of it as the price of smartphones actually continues to come down. I think it gives us the ability to actually reach the true underbanked and unbanked.
What do you mean by community approaches?
So I think when we look at traditional microfinance and we see chamas in East Africa or self-help groups in India, I think that there is a place for both technology and community, where you can't take everything into a digital realm. I think when we look at some of the financial tips and financial literacy and things that have been gained by women sitting together and talking about money, I don't think technology completely solves that. And so I think in some ways, there will be some barrier to us being able to use technology to completely change financial systems. And I do think that community should still exist within that kind of technology environment.
So it's tech delivering hype, but also delivering hope. It can be hype and hope.
Yes, exactly.
Do we have any questions? We've still got a few minutes. Any questions, Peter?
So first one we have is for Shivani. How do you assess creditworthiness for a new customer in just 2 minutes?
So we instantly underwrite our customers using an Android application. And so we are bringing in both device data as well as behavioral data that we collect through our application. So in that sense, we're looking at, what's your location to verify employment history. We're looking at things like how you fill out the application, what the loan will be used for, the amount of capital that you're requesting. But at the end of the day, we're thinking about it as how do we understand your daily life and your current financial, let's say, mindset as you come into our application.
Or can I just put on that? Well, the first time I met Shivani, and we published this in the FT, she'd said this bizarre thing is that if you fill in your contacts book, first name, second name, rather than just using a nickname or a single name, you are 40% more likely to repay a loan on time than if you just use a nickname or something.
That's fascinating. Okay, we've got another one here. What is your view about the many underserved people in developed markets like the UK? Are you focused only on developing countries?
So we've actually this past year launched in Mexico as well. We're now looking at slightly more developed markets as well. So I don't think it's only focusing on emerging markets, but I think by focusing on emerging markets, we were able to really start to, I think, tackle the opportunity size as well as the magnitude of this problem, because that is where a lot of underserved customers are. But eventually, we do see ourselves actually coming into developed markets as well.
Okay. So then, you did touch on this, but how do regulators react to your solution in the countries you are servicing, and what kinds of relationships do you have with the domestic regulators?
So I think it's going to vary. Where the regulator is very pro financial inclusion, in those cases, we are actually we have a seat at the table. We are talking to them about what are the true problems in the market. I think if you think about it, without a credit bureau or national ID systems, in some ways, the regulator doesn't actually know as much about their consumers or their citizens as we do. And so I think it is our responsibility, that is pro kind of these citizens, to actually come and show the regulator, both income levels, the disparity, show them what we can do to solve that.
Okay. And then we have another here, like, what is your acceptance rate? Like, how many people do you approve, or what's the rate there?
So this is the thing that I think we are most proud of and excited by, is that, we've been able to maintain a very high repayment rate, while every time we roll out a new model, we've actually increased our approval rate as well. And so our approval rate across our markets is about 60%.
Wow, that's higher than in developed countries. It's quite amazing. So, and then interest rates, why don't you give a sense of how big the loans are? Because we're not talking about $10,000 loans here. So why don't you give us a sense of the rates as well?
Sure. So in terms of the size offering, this may seem small to the market, but again, it's remembering the countries that we work in. So it will go anywhere between $20 all the way up to about $1,000. And then in terms of the rate, we have a non-accruing rate, and so it's a flat fee-based approach. So our lowest rate is about 5%, and then the highest rate is about 10%.
But then repeat customers get a better deal, don't they?
They do, and so over time, we'll continue to bring that down as well.
Right. Okay, and then default rates?
Our write-off rate, we can say, is below 10%.
Okay, that's impressive. Okay, well, that's all we have time for. Thank you very much, Shivani. Thank you, John. Appreciate it.